What's up, everybody? I am Jaspreet Singh from theminoritymindset.com and welcome to The Minority Mindset. Leon Cooperman is a very successful and very outspoken investor. He runs a hedge fund called Omega Advisors, and they manage over $3 billion worth of assets, and most of that money is his. Yeah, he has his own hedge fund just to manage his own money. The interesting thing about Mr. Cooperman is that he's not scared to tell you what he thinks. When the primary presidential debates were happening, he went on to CNBC and he started talking about how he was worried about the future of the economy, and he got so angry and so emotional because Elizabeth Warren called him a deadbeat because he's a billionaire. And he got to the point where he started crying on live TV. When it comes to the markets, he knows a thing or two because the markets made him one of the wealthiest people in the world. He more recently did an interview with a company called Real Vision, which is like the Netflix for finance, and he gave a very interesting warning about the stock market that I want to share with you. But before we get into that, smash that thumbs up button below, because the way the YouTube algorithm works, if you don't hit that YouTube thumbs up button, then YouTube is much less likely to show you and other people our financial news and education videos. Mr. Cooperman said that there are three different markets controlling our stock market right now. There's the tech market. These are your FANG stocks: Facebook, Amazon, Apple, Netflix, and Google. And I guess you could count Tesla in there too. There's the retail market. And when I say retail stock market, I'm not talking about retail stocks. I'm talking about retail traders. So amateur traders who are trading off of their phone and laptops, people who are not professionals. And then there's a third market, which he calls everything else. He says that these three markets are kind of acting independently of each other, and they're going to kind of see their own trajectories into the future. Let's start by talking about what he says about tech stocks. He started by saying that tech stocks have very rich valuations, so they're kind of expensive. There's no surprise there. Companies like Tesla are selling for 1,100 times earnings. Let me translate what that means for you. Let's say you started a company and your company makes a whole $1,000 of profit this whole year. So this year you made $1,000. If your company was valued at 1,100 times earnings, that means you would take this $1,000, multiply it by 1,100, and that means your company is worth $1.1 million. You could sell your company that made $1,000 for more than $1 million. Anybody want to start a company and sell it? Now, Tesla is an exception. Most companies are not valued like that, but he also balanced this statement out by saying that his largest investments are in tech. His biggest position is in Alphabet, the company that owns Google. According to him, the FANG stocks, Facebook, Amazon, Apple, Netflix, and Google are a little bit expensive. They're rich valuations, but they are, quote, better than gold, according to him, because of how low interest rates are. Low interest rates mean that borrowing money is cheap. At the time of me recording this video, you can go out and borrow $1 million and you'll only have to pay like 3% interest to your bank. That's not a lot of interest. What he's saying is, if you go out and you borrow a lot of money and then you throw it into the market and the market grows by more than 3 or 4%, then you're winning because your profits from the market are gonna pay for the interest on your money. Keep in mind, this is not something he's recommending to new or non-professional investors. This is something that institutions and professional investors are doing. So you have these massive institutions borrowing millions and millions of dollars and then throwing them into the market because they don't need to see huge returns to make a profit. The same goes for companies. Facebook, Amazon, Apple, Netflix, and Google can borrow a ton of money for very cheap, and then they can invest this money into their company because interest rates are low. The advantage these companies have in a time like we're seeing right now in 2020 is that these companies are digital. They don't need you to go into the store to make money. We are still in the middle of a pandemic, and if we see more lockdowns or business restrictions, these tech companies can continue operating like normal. You saw how Amazon blew up and stores shut down because people were just shopping online. Now, while this all sounds good, Mr. Cooperman did issue a pretty strong warning when it comes to tech stocks. He said that anytime you see a major run in one sector in the stock market, like we see in this tech market, then that usually means you're gonna see a lot of failures too. I don't know exactly, but that might mean a tech bubble bursting. He said that there's a chance that we could see the smaller players in tech not survive, and if that happens, that would infect the entire tech space, and so that's something to keep in mind if you're investing in tech. He also said that he wouldn't be very surprised if these tech companies are forced to pay an excess tax on their profits because these tech companies benefited so much from this pandemic while so many other businesses were forced to shut down. If this happens, you could see tech stocks take a hit because their profits would go down. Now, let's move on to the second market he was talking about, the retail stock traders, the regular people that are investing in stocks. During all of 2020, Mr. Cooperman has been very vocal about people just throwing their money into the stock market, into hot stocks without knowing what they're doing. When when retail traders started buying up airline stocks when the airline market crashed, he came out and he started bashing the retail traders, saying that this was going to end in quote tears because people are buying stocks without knowing what the heck they're doing. He still thinks that a lot of retail traders are going to start crying soon. He gave the example of when Carl Icahn, another billionaire investor who had a massive stake in Hertz, he sold his stake in Hertz for a huge loss because he sold it at 73 cents a share because Hertz was failing. Then just a few weeks later, retail traders started buying up this bankrupt stocks by playing hot potato, so they started buying up shares of Hertz when it was bankrupt, and then this bankrupt stock went from less than $1 a share to $2, $3, $4, $5 a share while the company was bankrupt. That's a 2, 3, 4, 500% return on a bankrupt company. Then, not surprisingly, the Hertz stock tanked again. Mr. Cooperman said that all these retail traders that are trying to get rich quick by trading hot stocks without knowing what they're doing are going to end in quote tears. Apparently, it's not a bad investment unless you start crying. He said that he's not paying any attention to this retail market because he said it's fueled by emotion and eventually it's going to crumble. That's a lot of tears. Now, before I get into the third market that he was talking about, I want to really quickly make sure we're all on the same page about how stock market investing works. If you want to invest in stocks, you have to use a stock brokerage like our sponsor, Webull. Investing and trading stocks with Webull is easy. All you have to do is create a free account, fund it, and then you can buy or sell whatever stocks or ETFs you want right off of your phone or computer, and they don't charge you a penny to make a trade. Are you ready for the best part? Webull is giving you Minority Mindset fans a free stock valued at up to $1,600 when you deposit $100 in your account. So if you want to learn more, get started and see how you can get your free stock, I got the link to how you can do that in the description below. Now, to be fair, they have changed their promotions quite a few times, so I don't know how long this promotion is going to last, so take advantage of it while you can. And Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. It's free to create an account, they don't charge you a penny to make a trade, and they are giving you a free stock. So if you want to learn more and get started, I got the link to how you can do that in the description below. Now, let's talk about the third market, the rest of the market. According to Mr. Cooperman, there's a lot of opportunity here if you can manage your risk. Over the long run, the stock market always goes up, but that doesn't mean the stock market's going to go up in a straight line. Our economy and our stock market still have a lot of hurdles in front of us, like a fierce presidential election, an expensive and uncertain economic stimulus plans, skyrocketing national debt, unbelievably high unemployment, a potential housing crisis, and a pandemic that has not gone away. Our economy is not in the clear yet, which is why you can expect a lot of volatility in the stock market up and down. That's actually why Mr. Cooperman went out and made his first investment in gold ever, because he's worried about the national debt in our economy. But sticking with stocks, the reason most people lose money in stocks is not because they pick a bad stock, it's because they get emotional and they hear some bad news and then they see the stock go down a little bit and then they panic and then they sell at a loss. You're supposed to buy low and sell high, but a lot of people get emotional and they end up buying high and selling low. There's a lot of opportunity to make money as an investor in the stock market, but you need to make sure you're doing your research and make sure that you know what your goals are. Are you investing for the long term? If so, don't get bogged down by the day-to-day details. The longer you own your investment, the better chance you have to come out a winner. I mean, you have exceptions if a company's on the verge of going bankrupt or failing, but in general, the longer you own an investment, the longer the company has to grow and build, and that way you have more time for the stock to go up. That's why long-term investing is a much safer investment in the stock market, because it gives your company and your investment time to grow and compound their money. Compare that to day trading or short-term trading where you don't have that opportunity. If your goal is to be an investor, then your job should be to buy a good investment, buy it at a good price, don't invest more than you can lose, and then plan to hold it for at least 5 years. Then sit back and relax. Don't panic if your stock goes down in a couple of weeks. Stay calm and remember what your goals are, and if you do see the company go down big in price, that could be another opportunity for you to come in and buy, unless something major fundamentally changed. This economic crash is far from over in our economy and our stock market, but if you are looking for more resources to help you be smart with your money, check out our brand new theminoritymindset.com website. We just launched this new version of our website, and if you haven't checked it out yet, check it out, because we're putting out a ton of articles that will help you manage your money and make smart decisions with your money. These articles are free because it's just on our blog, and we even launched our own community feature on our website where you can go in and network with other minority mindset thinkers. So if you haven't checked out our new website yet, check it out at theminoritymindset.com. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about how you can find a strong company to invest in on the stock market, I already made a video on this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.